So I'm going to be breaking down how we are setting up our startup with three co-founders and why we're using holding companies instead of holding shares directly. It's a setup more founders should consider. It's a cleaner, smarter, and way more efficient way of doing things long term. So what we're doing is there's three of us building a property management app, and instead of putting our own personal names on the cap table, we're each creating our own limited company in the form of a personal holding company. Then these three holding companies will each own shares in the main operating company which runs the business. So we're doing this for four main reasons. The first main reason is tax efficiency. So when the main company takes out profit, it can distribute dividends out into our holding companies. The holding companies don't pay tax immediately, only when we pay ourselves personally. And this gives us more control over how and when we pay tax, which is useful as we each own or plan on starting other businesses in the future, so we can leave money to reinvest later. It also leads to a cleaner ownership. It keeps our personal finances separate from the business. Each holding company can be used to manage investments, take on directors' salaries or dividends, and even hold shares in other ventures later. It's cleaner if someone ever wants to leave the business or wants to sell their shares or bring on a new partner. It also adds more exit flexibility. If we sell the startup later, then the proceeds go to our holding companies. We can use business assets disposal relief, or formerly known as entrepreneurs relief, for potential tax breaks. And again, through this, the money stays in the holding companies until we decide to extract it. It's also just more professional. It's the kind of structure that investors, lawyers, and accountants like to see, and it shows that you're thinking ahead and not mixing business with personal accounts. So how this works is there's three founders, and each founder holds a holding company, and each holding company owns one share in the trading company, or however you want to split it. This trading company handles revenue, expenses, product development, customers, and pays dividends and salaries to the holding companies when there's profit. This money in the holdings company can then be stored to reinvest later into other businesses like Tommy and Chris's trading company, sorry, or Finn's trading company. And that works the exact same way. And we can take payments through dividends when we decide to. Is this set up for everyone? Probably not if you're a solo founder or just testing an idea. It adds extra admin and costs. However, if you're working with co-founders or planning to scale, looking at long-term growth, investments or exits, or wanting to keep personal and business income clean, then it's 100% worth doing. So to update you on the progress we made this week, all we really did was move the main web page out of the client section and move it into the web page section, which I've lost here. And we did this because we wanted to use Next.js, which allows for server-side rendering. This was important because we're going to be using search engine optimization. It's quite a big organic network to get traffic onto our website. And the way Google search engine works is it has things called robots, which crawl through web pages and find keywords to like understand what your web page is about and present it to the right people. And if your website is rendered on the client side, then it doesn't generate a full HTML structure until a user actually clicks on your website, because it's all JavaScript, so the robots can't crawl through that effectively. But if it's rendered on the server side, then the Google robots crawl through that before a user clicks on it and rank your website higher based on the keywords that you present in your HTML file. And because of that, it's massively crucial for SEO. If anyone uses SEO for their website, then server-side rendering is so important. Additionally, if I get this up, we also removed the business management section, because the value to cost ratio just wasn't there. And I'm focusing on features that solve immediate pain points at the minute, and what features give us the most leverage and to get my product launch as soon as possible. And I didn't think the amount of time and energy it would take to get these features could provide enough value to the user. Secondly, I finally connected the back end to the front end for both the tenants and property sections. So all this data is live and real. There's still a little bit of work left to do, but it's starting to feel like a real app now. So that's how we're doing it. 3 co-founders, 3 holding companies, and 1 main operating company. It's pretty simple to understand, I think, once you sort of get it, and it'll make life way easier down the road. And thanks for watching. Don't forget to like, subscribe, and I'll see you next week with another update on the build.